Hi, everyone. This is Rob Roy of Elliott Options, and welcome to TradeFinder Live. If this is your first time joining us, welcome. For those of you that have been here before, welcome to you as well, and welcome to everyone that is live streaming over the various social media platforms. Happy to have you, and obviously a lot to talk about regarding the market since we got together last week prior to the holiday week. But if this is the first time you've seen us, we have to show you this disclaimer. If you've seen us before, you know it. But if this is the first time you viewed one of our broadcasts or webinars, please take a screenshot of this, read it in detail at your leisure. It is very important. A couple of things that the powers that be wants to make you aware of is, number one, we are not registered to give individual investment advice in the United States. And number two, because we have a lot of international viewers, any pricing that we're talking about is assumed to be in US dollars, unless noted otherwise. That's it. So the rest of it, again, it is important. I'm not trying to make light of it. So please take a screenshot, read it in detail when you have more time. Here's a rundown of how TradeFinder works. We'll talk about the markets. And as I mentioned, a lot to talk about since last week, last time we chatted. We'll go through and do a review of any case study considerations or case study alerts that we have sent out through our subscribers. And we've got a really interesting one to show you this evening, especially when the markets get like this. Then we will review the case study considerations we've identified in TradeFinder in the past, update you on where the performance is on those. And then we'll look for a case study consideration for tonight. And with whatever time we have left at the end, we'll open it up to a general Q&A, which quite often amounts to you guys asking us some of your favorite or showing us some of your favorite stock symbols. And we look at what our technical indicators have to say about them. So that's it. That's how TradeFinder works. So without any further ado, let's go ahead and take a look at where the market is. And if you have taken a look at the market at all today, you know, it was a crazy day. So let's go ahead and rebound a little bit from where we were last week, talking about a low volume week with the holidays. Often that's a period of time where the market drifts higher. There's been an old expression, and expressions become old expressions usually because they stand the test of time. Don't short a dull market because usually when there is lower volume, things tend to drift higher. However, when there is low volume, it promotes or has the potential to promote exaggerated volatility. And that's what happened on Friday when that new Omicron or whatever it is, I didn't even know that was a Greek term, variant was discovered out in South Africa. And then to talk about how many mutations it has, again, I'm not in the medical profession, don't pretend to be, don't know anything about it. All I'm doing is relaying the information as it affects the markets. And the markets looked at that as with all these variants and the potential for it to spread. This is one that seemed to be concerning to some of the vaccine makers, saying that, well, we may not have a vaccine for a number of months in order to offset this. And so we had that big down day. Well, the big down day that occurred on Friday, you can see got close to the 50-day moving average, but also separated us a little bit away from that 10-day moving average. So here we go, boom. Now there's a separation from where the market closed and the 10-day moving average. So we wait to see, okay, what's going to happen on Monday? Do we get follow through or do we go back? And you can see that we closed the gap and we tested back to the 10-day moving average and closed below it. Now our subscribers are aware that no security in any time frame gets very far away from the 10-day moving average. I talk about this all the time, in addition to the fact that gaps get filled. So we had two things in one, with Friday's downward move, and then Monday rectified both of them. So we closed the gap and we came back to the 10-day moving average, although we weren't able to close back above it. Well, then today, the market is doing fine. And then Chairman Powell of the Federal Reserve is giving a press conference. He's being interviewed by Janet Yellen, which was really an odd system of questioning, or just the dynamic was a bit strange considering the fact that she was a past chairman of the Federal Reserve. And they started talking and they got into talking about inflation, et cetera. And then all of a sudden, Chairman Powell says, yeah, at the next meeting, we're going to start talking about ending the tapering sooner than we thought due to the inflation data, et cetera. And so that just immediately, if you look at the chart, you can see when the market tanked was right after that comment was made. I happened to be watching him make that comment, and the market reversed from that point. And then you can see we closed on the lows. So we are officially testing the 50-day moving average here, closing just below it. But again, getting to a point where now we have that separation from the 10-day moving average again, but pretty significant down day today. Well, if we go back and look, you can see that we've tested the 50-day moving average numerous times. We talked about this in our SPY updates that we post on YouTube, and you can see that we've been here before. So is this anything different? Well, if the Federal Reserve starts talking about tapering faster than planned, because remember, we got a kind of shot in the arm here when it sounded like the Federal Reserve was going to taper slower than thought. And so that gave us a shot in the arm to the upside. And now Powell's taking all that back. Now, in fairness to Chairman Powell, and that's one thing that I don't do a whole lot of, is try to be fair to the Federal Reserve. Anyone that's ever heard me speak over the last 20 years clearly knows my opinion on the Federal Reserve. However, he didn't say they were going to end the tapering sooner. He said they would be talking about it. So he didn't commit to it, but boy, the market sure took it like that's exactly what was going to happen, because as I mentioned, that's the exact point when the market reversed, and then we just traded down lower from there. So now we have running commentary again on Omicron, whatever that variant is, because it has spread through numerous countries, and that was the concern as far as leaving South Africa in a very busy airport. Haven't, to my knowledge, at least at the time we started this, had a case identified in the US yet. Maybe we have at this point in time, but certainly a number of different countries that identified it. But then South Africa came out and said, okay, yeah, it has a lot of mutations and it's spreading like crazy, but the symptoms are mild. So, there's commentary back and forth. Oh, it's going to take a while to get the vaccine booster for this variant, but then it's super contagious, but the symptoms are mild. So, who do you believe when it comes to that? I think that we moved away from that following that low volume move to the downside on Friday, although the volume was big on Friday. I don't mean that the volume trading was Friday, was low, it was high, but it's a low volume week. And so we had the volatility, and then you can see that significant volume in the move down today. Now, is that enough? Is that enough of a spike in volume to get another reversal off the 50-day moving average? That's what tomorrow is going to tell us. And we're going to look at this as we go through and look at some of our charts this evening. Our subscribers are well aware that one day doesn't mean anything. You have to have follow through. And so we had the move down on Friday, no follow through, back to the upside yesterday, and then back down again today. So do we get follow through tomorrow? You have to have that second day follow through, a confirmation day, and a second day closing lower, breaking below the 50-day moving average would be significant, because we are just a little bit oversold at this point in time. And so you would expect kind of maybe a little bounce a la what happened yesterday. But the market's going to do what the market's going to do, and we'll be able to move from there. But getting up to the high that occurred here on the 22nd, where we were looking for that 472 level, and the high was 473. So we satisfied on the high of the day that last zigzag pattern that we had talked about. And so other than looking at the weekly chart and a potential 161.8% extension on the weekly chart, we're just so overextended with all these zigzags being hit. But then you have Tom Lee of Fundstrat coming out and say, this is a great buying opportunity. Maybe it is, but we're going to follow along with what the charts say and trade accordingly to that. So that's the SPY. And you can see that there may be a little bit of support down here from that recent high right in this area. I'll draw it right where that doji was that occurred back on the 2nd of September. So that's not too far from here, but we'll see if we get a bounce tomorrow back up towards that 10-day moving average. Maybe there'll be some buyers that'll come in and say, hey, yeah, we tested the 50-day moving average again, and we're ready to jump back to the upside. It's a pretty interesting time right now, but I think that you really have to pay attention when you see that kind of volume on this downward move. So we did it back here in September and October. We were able to rally again. But as I mentioned, that rally came on the back of the Federal Reserve's kind of surprising us by announcing a slower than was expected tapering program. And now if Chairman Powell has taken that back today and they're going to taper sooner and then get to the point where they start raising rates sooner, the market will struggle with that. Promise you the market will have a hard time with that. So let's look at some of the other markets. Like one of the markets that will struggle is going to be the Qs, because the tech sector will have a hard time. So you can see that we had a down day there today, but hung in there pretty well all in all, and the Qs are still in a wave 3 to the upside. And we look at the moving averages, not down to the 50-day moving average yet, like the SPY. So we had talked about this last week, how the triple Qs had reassumed leadership, and then everything's changed since then, but still looking better than the SPY from an actual chart standpoint. So you have to put some weight in that as far as whether or not, and we'll look at interest rates in a few minutes, and I'll tell you why I'm moving interest rates to that spot. But look at what happened on the Dow. And it's been really interesting. Our subscribers have been asking about the Dow lately on our Thursday night insiders meetings, which is for our alert subscribers only. So if you're wondering, well, what's the difference? Well, we have an alert service where we send out alerts with entries, any adjustments, and exits, which is pretty timely now, because when you start to get a market flux like this, you tend to move into some adjustments with what's happening with the market. Other than with TradeFinder, where we just look for case study considerations, and then you are on your own and do whatever you want with them at that point in time, and you're kind of on your own. But with our alert subscribers asking about the Dow, look at the chart of the Dow. That's much uglier than the chart on the SPY. So here we didn't get near the bounce yesterday on the Dow that we did on the SPY, and today is further separation from the 10-day moving average than we have on the SPY. So the Dow chart looks worse. So we just showed the Qs, which looks a little better than the SPY. The Dow looks worse than the SPY. So what does that tell you? Well, I think we should look at a few other markets. And the IWM had made that breakout, and we looked to see if that was going to be a false breakout, and it was. So it broke out above 230. It looked to be off to the races there. Everything looked great, breaking above there. And then here we are right back down into that trading range between 210 and 230 once again. So what looked like a really strong breakout to the upside there, you can see that if we move back, we were in a wave 3 at that point in time. So the Elliott wave algorithm has relabeled into the fact that we're still in a corrective pattern. So it's put us back into this correction that was going on for the entire year in this 210 to 230 range. But right now we're also oversold in the IWM. So you look at both of these with the IWM and the Dow, they're both oversold. So from that standpoint, do we look for a bounce tomorrow? At least in those markets, you would think that we're going to go back towards that 10-day moving average, because that's usually what happens when you get that oversold. Let's take a look at Bitcoin. Bitcoin had reversed. It was up nice, still finished. And I know that Bitcoin trades 24/7. If you're new, if you're following us on one of the social media platforms, live streaming, welcome. I know that Bitcoin trades 24/7 live, but we do look at end of day charts. And just like with the futures, there is a print that coincides with an end of day. But Bitcoin was up nicely, and it reversed when Chairman Powell made his comments as well. But it managed to recover back from that initial sell-off, and it's back closing right above the 50-day moving average. No follow through to the downside there. So if you're looking for Bitcoin as some sort of a leader in a risk on, risk off type of environment, maybe that gives some comfort, and perhaps we can get a bounce from the 50-day moving average here on the SPY, because no follow through to the downside there. Looks like we're just in a nice wave 4 correction. We're right at the 38.2% fib level correction on Bitcoin could be a good place for it to find some support and move back to the upside. We're also in an area of potential support not too far away from where the low was yesterday and today. You can see it right in that 52,000 area. We got kind of close to that area. That was the high here back in September. And then you can see how it was support also back in April and May as well. So support, and then it broke down. Is that going to happen again? And we'll see. But this is an area where we could get a potential bounce from that 38.2% fib level. It'll be really interesting to see what happens tomorrow. Again, follow through, so important. And sometimes it's tough to be patient when the market is doing this kind of thing, but you wait and you look for that patience, and then you make your decisions that way. Now let's look at the XJO. Now this is one that we've talked about quite a bit because it was in such a large triangle, a massive triangle. And you can see that it's broken out of that triangle to the downside. And we had a breakout down here, and then we did get a follow through day. So we tested back up yesterday, back down again in this bar. So when we're looking at this big triangle, and this is just as classic Elliott wave stuff as it gets, you have the completion of a wave 5, you go into a corrective Elliott wave triangle, well-formed triangle, lots of touches on the lower highs and higher lows. So you break down, and it looks like the XJO wants to go a bit lower. Now it's also at a point of support, so it's trying to hold here. You can see that was the lows from September and early October, so we're right back down there. It is also a little oversold, so we're into the point where some of these markets are a bit oversold, but you have to respect the fact that we could rectify the oversold condition and move to the downside. I will be interested to see if Chairman Powell backpedals on what he said today. Did he mean to say it that way? Because it was rather blunt, and he certainly doesn't have the tact that Alan Greenspan had on preparing the markets when the Federal Reserve was going to do something. He's been just flipping like a fish out of water with the okay, we're going to taper, and then, oh, we're not going to taper as fast as we thought. Oh, we might taper faster than originally expected. So, I mean, he's all over the map, and the markets don't like that. The markets don't like uncertainty. That's one thing you can write down, star it if you want rules, like no security gets too far away from the 10-day moving average, gaps get filled. Markets don't like uncertainty. And if we start to get to the point where we're not sure that the Federal Reserve has a clear direction, the markets won't like that until the Federal Reserve actually starts making policy. I don't think he needed to say that. He said that, well, you know, by the time we have our next meeting, we'll have more data. We'll have another CPI number, another unemployment number, et cetera. That's all he needed to say, was that, yeah, hey, before the next meeting, we have all these reports that'll come out, and, you know, we'll review those closely and make policy determinations from there. He didn't have to say that they were going to look at tapering off faster than initially thought. That statement didn't need to be made. So is he going to pull that back tomorrow? And because of the way it spooked the markets today, we'll have to wait and see. If he does, he has to be really careful. He just got reappointed for another term, but I think he has to be really careful about not losing credibility with the markets, because the markets have liked him. I mean, why not, with the trillions of dollars that have flowed into the system? What's not to like, right? But we'll have to see how that plays out. So that's the XJO. And then got a little tangent there with the Federal Reserve, which I tend to do quite often. Now here's the Nifty. So we talked about, and you know, how many times did we say that if we broke 49, we would see 47 in a short period of time? Well, how about one day? And so that's exactly what happened. So we broke down here, came back up, tested 49, and then boom, right back down to 47. Now we need to see if 47 can hold. We haven't labeled a wave 4 yet, at least not in the Elliott wave algorithm. If you're not sure what this program is, if you're new, if you're joining us on one of the social media live streaming platforms, this is called Profit Source. You can find it at hub.com, hubb.com. To me, it's the best Elliott wave software that exists. It's programmed directly from Elliott's own mathematical algorithm, which if you read it, and I have seen it, I don't fully understand it, but I've seen it because it's like that Beautiful Mind, the movie The Beautiful Mind, that all the formulas written all over the chalkboard. That's what it looks like to me. So that's why I use software. I know a lot of people try to plot Elliott wave by hand. Tough task there. You have to find someone that is really consistently good at doing that by hand. Maybe a math genius could do it, but that's what it would take, I think, when you take a look at that formula. So I like to let software do that work. But it hasn't labeled a wave 4 here yet on the Nifty, which I find interesting with this big drop. So does that mean that we could be dropping further? You can see a little bit of a bounce here, but man, we were way oversold with the move down on the 26th. So with that drop there, we're oversold, and we're also at that area of support. 47 needs to hold. So if you're wondering, okay, what happens, man, if you're trading this, we've talked about this so many times that if 49 got broken, 47 would be right there. If the market stayed above 49, stay long. But if it breaks 47 or 49, it's going right to 47. That's exactly what happened. Well, if it doesn't hold and get back above 47 here, it's going to 45. That's the next area of support. If you're curious where the next level would be. Again, we're oversold right now on the Nifty as we are in some of the other markets, but we'll see how that plays out. And the DAX, boy, Germany just really having all kind of problems with all of their, they've been, without getting it back into the medical stuff, but they've had numerous cases, record cases of the infection, hospitalizations, etc. They've had a very difficult time over that. We talked about how this was going to be a really difficult spot for the DAX to get above because it was a 61.8% wave 4. My favorite fib level, the 61.8% level. In addition to that, we had tons of resistance at 34, and that you don't go long the DAX unless we were able to break above 34 and above that fib level. And you can see here, there's the wave 5 target. So we've gone straight down towards that target. Now, if you're viewing this and you're like, why are you showing all these international markets? I just want to trade the US. Just a quick reminder that this is an ETF. All these markets that I've been showing you trade on the US exchange. So if you want to trade in the US, but you have some interest in some of these foreign markets, because we do have a lot of international viewers and we have a lot of international subscribers, you can still trade them on the US markets. They're patterns. Technical patterns is like any security, just different countries' markets. But look at that. I mean, do you get a much better Elliott wave pattern than that? We are. Common theme tonight, oversold here on the DAX, but man, just a classic wave 5 to the downside, which shows you Elliott wave works to the downside as well as the upside, which could be important right now if we are going through a change here. If the Federal Reserve does follow through with that comment, I guess, that Chairman Powell said that they are going to look really hard at tapering off sooner than expected. The market just is not going to handle that well. All right, so that goes through the majority of the markets. You know, the DAX is almost done here. It's almost hit its wave 5 target, so that would be a tough one to short at this point in time. Didn't really spend much time there at the wave 3 low, just kind of went right through it. Could it hit the target before bouncing? It could, especially with what's going on in the world right now. But as I've commented with the other markets, it's oversold at this point in time. So that covers all the international markets. Now, what do you do in times like this? Well, we've talked about this in past trade finders of finding triangle patterns, but on strangles, which is what we've done for our subscribers at Elliott Wave Options. So the case study that I wanted to share with you, which was an alert that was sent out to our subscribers, is actually a strangle pattern. As you can see here, it was on PLAY, which is Dave and Buster's. And look at this. This is just classic here. This is a mark-to-market graph, which shows you what happens every single day. So it's a profit loss that's updated every day on every single one of our alerts that our subscribers receive. Now, when you put on a strangle, you're buying a call and you're buying a put. We set them up a very particular way that if the stock breaks out, we are guaranteed to mathematically have the options, make money as fast as mathematically possible. So we're not guaranteed to make money. I'm not saying that. I'm saying that based on the math, the way options work, the way the Greeks work, we set these up to where if the stock does break out, the options will make money as fast as mathematically possible. But in the meantime, time decay is working on them, right? Because you're buying a call and you're buying a put. So it trades here underneath the zero line. So we're trading at a loss, then boom, the breakout occurs. That's what happens with these strangles a lot when the breakout happens. So the entry alert was sent out on November 9th. And here is the nice symmetrical triangle. You can see could go to the upside, could go to the downside. Really well formed symmetrical triangle with the lower highs and higher lows. And this is really important as well, because I kind of briefly talked about this, but this is a good highlight of it on the importance of having a follow through, a confirmation day. Look what happened here. Right in the middle of November, we had a breakout to the upside from where the triangle was, but the second day came back down. No follow through or confirmation day, and the big move was actually to the downside. The market does this all the time. It gives these head fakes all the time. That's why one of our rules is to wait for a follow through or confirmation day, which is a second consecutive day in the same direction with a higher high or lower low close. And so this is why. You get a break to the upside, you're thinking, okay, we're breaking higher. Let's take the put off. No, don't do that. Not until you have the confirmed breakout move. So here, the big move was actually to the downside. Now, in this case, we're oversold. You can see we had this big gap down with the market. Now, this is another thing about these strangles. So they add protection to the impulse portfolio, which is our directional portfolio, if the market goes through one of these changes. Are we going through a shift in the market as we did back in March of 2020? It's way too early to say that yet, but possibly. And so we had a little bit of a blip down in the impulse portfolio, the directional one, because the market had been going to the upside. So the majority of our directional trades were higher. Well, if the market reverses, then it takes time to adjust and reverse those. But in the meantime, you have strangles on that all have long puts, and so they can make money on a downward move, as we had again today. This one was already closed. We closed this one on Friday, but you get the point that you have protection if the market breaks down, and we utilize that a lot for our volatility portfolios done for two reasons. One, it protects the impulse portfolio, so it's added protection, and we get these breakout moves so we can generate nice trades. And so there was the move to the downside. We're oversold based on the separation from the 10-day moving average. We gapped down. So there's two things that could promote a bounce. And we were near an area that had acted as support in July and throughout the month of August. So at this point in time, it's like, all right, let's go ahead and take the gain. So we moved up and made a nice nearly 38% gain in 16 days. So 2 weeks, 38%. That's kind of that's about where these strangles we want them to be. They've been taking a little bit longer than that because the volatility hasn't been as high, but this is what happens when the volatility comes back into the market. So perfect illustration of why we have this in our portfolio. So I thought that one's a good one to share with you this evening to explain why we do that, because people are really into the impulse portfolio, because when you're trading directionally and you get the direction right, you can generate really great gains. Well, the gains when you have both sides covered, when you're buying a call and buying a put, the gains aren't going to be as spectacular, but you have downside protection and you can profit on downside moves. You can profit on upside moves as well, and you can generate good solid gains. Maybe they're not the eye-popping, the spectacular ones, but that's okay. That works out really well. So wanted to share that with you. Just making sure that I'm back on the screen. Looks like technology is cooperating with me this evening. So that was our case study example that was sent out as an alert to our alert subscribers. Now let's catch up with our past case study considerations with TradeFinder. So here was Camping World, which see the symmetrical triangle. So this is one of those that we would be talking about for strangle. And there we look at that move yesterday. It really tried to break to the upside, came back down, and a little lower today, but all in all, considering what's going on in the market, Camping World staying pretty strong. Perhaps the fact that interest rates are dropping back down is having something to do with it. I'm going to show you that in a minute. because I had been commenting in the past that, well, with interest rates going up, these big expensive motorhomes, et cetera, campers and all, they're more expensive to finance. Oil has been going up, so they're more expensive to put fuel in. And so this more downside breakout seemed to make sense, but then they had their earnings report and it's been kind of to the upside since then, bucking the trend a bit, a little bit surprising. So here we had this initial downside move that we were looking at info, and then we sent this out as an alert to our subscribers, but we adjusted back to the upside, and you can see that it has been moving higher, kind of also treading water a little bit, performing better than the market, but a little bit of resistance there at 130. Tried to break above it yesterday. Nice close there right at 130 and then back down today. So you look at the 10-day moving average, close below the 10-day moving average, but maintain that upper trend line. What happens tomorrow is very important with that. Now, take a look at Texas Roadhouse, another one of the strangles that we had identified as a consolidation. Nice symmetrical triangle there, and boom. So there's the breakout that you want. That should be closed off. If you haven't taken a profit in that yet, you might be getting a touch greedy on that. That's a pretty nice move there from 92 or 3 down to almost 80. We look for 10% moves and we had it. So that one we're going to close off our list. We won't show that one again. Another example of why having the strangles when you go through a period of market uncertainty makes a lot of sense. Looking at the XLF, now this one was a bit extended to the upside, but interest rates were moving higher. Well, interest rates have changed. You can see this has moved down, and now look, this is at an area of support. So what do you do with the XLF? Well, it's oversold, as you can see from the 10-day moving average. It's also at area of support at 38. This is going to go as interest rates go. So here's where I was going to show you the interest rates, the TNX, the 10-year. Look what's happened. Now, with the market moving to the downside, when you see this occur, this means money is moving into bonds. So bonds move in inverse proportions. If you're not familiar with the bond market, how interest rates work, as prices go up, yields and rates come down. So when money leaves the equities market and goes to the bond market, you look to see where rates are going. And I've said this numerous times that if you want to be a good equities trader, you need to have at least a decent working understanding of the bond market. You don't have to be a bond expert by any way, shape, or form, but understand how the bond market works and how it affects the equities market. We have a doji there today. So when we were just looking at this, the XLF is at support. It's oversold. It looks like it wants to bounce at this point in time. And then you have the TNX, which is down here, the 10-year. It's also at an area of potential support right there at 14 with a nice doji. Could we bounce from here? We could. That kind of makes sense, right? If you got a bounce in interest rates, you'll see a bounce in the XLF because the financials like it when interest rates are going up. That's why XLF was going up back over here when interest rates were going higher. Well, they double topped a bit right here. We did make a new wave 3 high, but just barely. And then we've come back down and now we're at a perfect 50% correction. So if the TNX is going to bounce, now's a great opportunity. So we're right at a 50% correction. We've got a nice doji. And again, looking at the 10-day moving average, it's a security. No security in any time frame gets far away from the 10-day moving average. And there you go. So we're a little oversold there as well. So perhaps we get a bounce in the markets. But if we get a bounce in rates, can we get too big of a bounce in the market? I think it depends on how big the bounce in rates are. As long as it stays above 1.5, the market isn't even going to blink about that. When the markets, when interest rates start to get up towards 2, I think that's when the markets can really have a problem. So FND, looking at that, it's come down here. It's consolidating in this area. So if you were looking to stay long this, you would want it to stay above 130. That's your key level there. Still a bit of an uptrend point right here through there. And so holding 130 would be a very important level. Now with interest rates coming down, is that going to help the housing market? Some say that. If you looked at any of the financial news or following any of the financial networks, they're talking about that with rates coming back down. Could that boost housing again? Because if people are starting to say, oh, rates are going up, that's going to be the end of the housing boom. Maybe not. And so then we look at synopsis, and we should have talked about this last week because it hit its wave 5 target. So we're taking that one off as well. For some reason, I didn't scratch that last week, but we should have. And then you can see how important these wave 5 levels are. It goes up and hits its level, and then it's come back down and is testing this area of support right through there at 340. But that would be if you hadn't closed it out. You want to see it hold 340 to see if you can get a bounce and a further follow through from there. MMC, we were looking for this one to go back to the upside, and with the market, it's held in there pretty well also, but coming back down, looking at the 10-day moving average, it did break it today. Hasn't quite gotten to the 50-day moving average yet, so a little better than the market, but is this another potential double top right here? We'll see. Again, barely holding on to a trend line to the upside, but you could certainly say that the trend line could be drawn just slightly different, and perhaps we barely broke below it today. So if you drew it on a slightly different angle, you could say, no, that's the trend line and we broke it. But it doesn't matter, because we're talking about when you break a major moving average, support, resistance, break out of a triangle, et cetera, you have to have the follow through a confirmation day. So tomorrow will be very important in that one. So perhaps there's a couple of these that we could look to potentially adjust. Why would you want to do that? Well, if you have a wave 5 that's double topping and going to correct, you can see that, man, it could come down here into this area rather quickly. Well, that's a 10-point drop that you could take advantage of. But tomorrow will matter. Now, McDonald's, this is one that we really want to look at, because McDonald's has the potential of being kind of in a defensive sector, right? So this is going to give you an idea of where the market is. We talked about this before, that people do their vices no matter what's happening in the market or the economy. The sin stocks, alcohol, tobacco, and gambling is where money moves, because people feel like those vices are, people are going to find a way to drink, smoke, and gamble no matter what's going on in the market. That's been an old adage as long as I've been trading. And so McDonald's is kind of one of those things that, okay, well, you know, fast food, lower cost. If times start to change a little bit economically, then that could be a positive or a boost for McDonald's. So we looked at that last week and hasn't worked out that way, has it? Notice that we've relabeled in the Elliott wave pattern, no longer in a wave 3. So when you see that and you don't really have a pattern, this is one of those times, because we will adjust when we can, if there's an opportunity to make an adjustment. But when you see this, the only thing that would keep you in something long right now here is the fact that we're at a potential area of support there at 245, and we're oversold. We gap down, pardon me, and we're oversold from the 10-day moving average. But other than getting a bounce back and potentially getting out up here around 250, because we could easily bounce back to 250 on McDonald's, close that gap, get back to the 10-day moving average, test an area that was support, now will be resistance. That would be a better exit to get out. But at this point in time, there's not, a clear pattern. The Elliott wave pattern is relabeled into where there's nothing there. So you could look at a bounce to have a better exit, and then potentially go ahead and say, okay, that one didn't work out. We're going to move on and look for other things. That would be the plan of attack there for McDonald's. That one surprises me just because of the sector that it's in. Now, is that showing significant weakness in the market? Because a stock that has traditionally kind of been an avenue of safety, if you will, when things were getting a little squirrely in the economy. That I find that to be interesting, that McDonald's dropped when interest rates dropped. So that's why, if you want about the Qs, that's why the Qs have performed a little bit better. Interest rates falling down is going to help them. But if it bounce back, we'll see. So a lot is going to be determined over the next couple of trading days. So by the time we talk again next week, we're going to have an awful lot to talk about. So with that, let's go ahead and see if we can find a case study to look at tonight. Now, we've had a pretty good bounce in the VIX. We're up at 27. It's going to make it a little more challenging to find. It doesn't mean that we can't find one, but when the VIX is that high, and if you're wondering, okay, well, where is the level where it's that high? Well, when the VIX starts to move above 25, that's when you have to be really picky on finding your strangle patterns, your triangle breakouts, because you need to have the volatility lower. So when it breaks out, you get the volatility spike. You don't want to put these on when you have a volatility spike, because then you're buying the higher volatility. And even if the stock breaks out, if it doesn't break out in a real volatile fashion, if it just kind of takes off on a 45-degree angle, that volatility comes out and you actually lose money when the stock breaks out. So volatility is really key. That's why it's called the volatility strategy. So we pay a lot of attention to volatility. So my point is, looking for those is going to be a little more challenging. There are still 40 consolidating ones. There's nothing in the bullish impulse. That makes sense after a day like today, but there are a few corrective ones. So let's take a look there and see if we can find something. Now, remember, the challenge here is the fact that we're oversold. So putting something on now when you're oversold to trade to the downside. So this is a really difficult night to try to find a case study consideration, but let's see if we can find one. And if not, then we'll say, hey, sometimes the best trade is no trade. So if we don't find one tonight, we don't find one. But here's the list of where we'll look to see if we can identify something. So Skin is a beauty company, and you can see when I look at the DMI on corrective trades, what we're looking for here is potential zigzags following a wave 5, where we could have an upward move, or a wave 5 that ends in a corrective move back to the previous 4. So there's different correction patterns, right? There's flat zigzags and triangles are all corrective patterns. So we're looking to identify those. And if we're looking at a downside move, then I do look at the directional indicators, but the DMI as a whole is not my favorite indicator to look at, because it takes time. And we all know that the markets move down faster than they move up. And so with the fact that the DMI is a tiny bit of a lagging indicator, look more at the CCI, which really is very responsive to the day-to-day movements in the market. You can see here we're at 25. I don't know what you do with this. It's already gone back to its previous 4. Is it trying to make a triangle? Perhaps that was a little bit of a triangle that occurred there. But if so, then we had a breakout day today, and you see if there's any follow through tomorrow. Could there be follow through? Well, we're at a pretty good area of support. I just don't see a trade or anything to do on that one. So we'll leave that. We'll move on to the next one, Spectrum and Spectrum Brands. I don't know if this is the cable company. It could be. Supposedly the stay-at-home stocks are back in favor now. Well, if this is the communications spectrum, then that would be, you would think, okay, well, that's something to look at. But that pattern doesn't look very good, does it? And if we put the 10-day moving average on, we've broken below that. There's a ton of support down there around 97. We're trading at 100, so maybe there's a 3-point move lower there. It's not as oversold as the market itself. I don't really see much of a trade there either. 3 points on a $100 stock is nothing that you would want to look at. Quantis Services, PWR, also in an area here where it's awfully close to support. So some of these have already made their break. And there's not a whole lot of room to move. Now, one thing that we would look at here, hopefully you already mentioned it before I brought it up, is that you look at this and say, well, hey, there's a gap there that hasn't been filled at 105. And so perhaps if this stock wants to continue lower, and there's our 10-day moving average, we broke below that, and the 50-day today, perhaps this one's going to come down to 105. Now that looks interesting. That's the most interesting thing that I've seen so far. We look at the CCI, it's heading down towards minus 100, but we have extreme point lows down there around minus 300. So there's a lot of room for that to move before it would find support based on that. Money flow has gotten bearish. And so that looks interesting to me. So I'll make a quick note of that. PWR, as far as a potential bearish trade with support and a gap down around 105. Now, of course, we have this wave 4 level here. Tiny bit oversold from the 10-day moving average right now, just a little bit, but that's the best looking chart I've seen so far. So if we're going to keep an eye on something kind of like that one at this point. And so we'll look at JD and another one that's right back down here to an area where there's potential support. You can see this just zigzagging all the way to the upside there. You wonder why we talk about zigzag patterns. There they are. There's one, you draw multiple zigzag patterns through that. I love that when they set up that way. And look at this from an Elliott wave standpoint. If you're interested in Elliott wave and you're here because you want to learn more about it, maybe you don't know that much about it, we have a ton of education on our website at EWOtrader.com. We pride ourselves in our Elliott wave education. Look at this wave 5 is 62%. There's that 61.8% level again, just like I was talking about on the DAX. There's a big level of resistance there with that wave 5, and it also hit the wave 5 in the tap box here, which is time and price projection, as evidenced by the software program. So you expect it to move back down. It did. And so, wow, can it hold this area? If not, then it's pretty easy to know where the next target is. It's right there at the previous 4, but it has to break this level first. So if it breaks 85, it could come down to 76, but you need that follow through day tomorrow. See where the 10-day moving average is? Yeah, we broke below that. So if we break below that tomorrow, so that would be like a watch list. So we would say a watch list on JD, follow through to the downside. So that's the notes that I would make to see if that occurs. Then it might be interesting, but not tonight. So far, PWR looks to be the most interesting. So one more to look at, and then we'll take a few questions before we wrap things up for the evening. So taking a look here at 185, this is USA momentum. Interesting. We have created our own momentum search as well. The momentum seems to be dying down a little bit. So right down here around the 183s. And so how many of these do we see that are right at an area of support? So are we looking to see a market bounce? Is that what's going to happen from here? Kind of seems like these corrective stocks have found an area. If not, so if they don't hold here, then you're looking at a significant breakdown. So if this doesn't hold here, you can see the next target is easy to tell is at 175. So if we don't hold here, then we go down to 175. But again, looking for a follow through day. So that would kind of be on the same thing as JD. If you were looking for MTUM, you would want to see that follow through to the downside. So let's go ahead and make PWR to the downside. And what was our downside target here? 105. Potentially there. Of all the charts we looked at, to me, that looks like the best one. So that's a case study consideration for you there. You can take a look and see what happens at the open tomorrow. Again, we are, just to reiterate, a touch oversold at this point in time. So perhaps we go back to the 10-day moving average, perhaps not. We'll wait and see how that plays out. But at this point, I'll go ahead and open it up and take a few questions, a few stock symbols. Emilio, examples of some potential trades. Yeah, a lot of the bullish stuff obviously isn't going to be looking too good when the market starts to move back to the other direction. And that's the point where we like to have the volatility portfolio if the market is going to reverse. Now, we'll see what happens tomorrow. Now, Friday, we had an ugly day. Monday, big bounce back. Today, we have another ugly day. Do we bounce back tomorrow or do we follow through? If you're wondering where the futures are right now, at this moment, the futures are up 31. So that would suggest a potential of that oversold bounce scenario. Again, with the SPY right there, that big volume spike, does that mean the sellers kind of did their thing today? Well, that's what tomorrow will tell us. If we bounce back up towards that 10-day moving average, which we likely will at some point, question was, do we test the recent highs there from August 1st before we come back and bounce higher? At this point, if this holds, and it looks like we just dropped within the last few minutes, so we were higher than that just a few minutes ago before we before we had a little bit of a drop. So the futures were even higher just a couple minutes ago. Okay, Alan, yeah, FTSE is what we had, we were looking for last week on the ISE. So let's see. Doesn't seem like we have that exchange. Oh, LSE, sorry, LSE. Yeah, we don't have that either. Well, surely we have the FTSE somewhere. We just have to. Tell you what, I will search for that, and I will have an opportunity to see that next week. I'll find that out. A couple questions on natural gas and USO. Now we are going through, they both rebounded nicely today from their lows at the open. And oil's up after hours. Natural gas is up a little bit after hours, but there's a little bit of a warm front that's come through, and that makes those struggle. Now, if you're looking at UNG, here's an area where if it's going to hold, this is it. Because that's a potential area of support. If you look at the 10-day moving average, it's oversold a bit. Oil, we take a look at the chart of oil for the energy stocks, which we had a number of quick in and out trades. Oil is not liking this economic stuff here. So that's totally different looking chart than UNG with this diving to the downside, but it's getting awfully close to an area where it could find some potential support here. Also very oversold oil right now. So we had this gap down, but this isn't an ETF that you can see gaps a lot, but doesn't mean they don't get filled. It's just common for it to gap. So when you see a gap like that, it's not quite as alarming as normally when you see a gap in other securities, but it is oversold from the 10-day moving average and traded well off the low. But 45, it may want to work its way down there first, and we'll see if it corrects that area from the 10-day moving average. So some patience may be in order for some of these energy type stocks. FCX, remember we do have the strangle on the XLE as well for this exact reason. That's why that position exists. So we're taking a look here, because remember we talked about the volatility portfolios designed to help protect against impulse trades. So there's Freeport-McMoRan was asked. That's an area of support where it would try to hold here. It's right at the 50-day moving average. It's been support resistance for most of the year. The 10, 30, and 50-day moving average are converging here. So it tried to break away from it. Look how it tested it for a good part of October into early November, and it looked like, okay, we're ready to run. But then likely with everything that's occurring with the market, we're right back down to this area. So 37 matters, but I like this one to watch to see on a direction. If it does hold here and take off again, it has the likelihood of making a run up there to the previous highs. And if it doesn't, it's got a pretty solid target down there at 31 on the low. So you kind of just let it tell you what it's going to do, and then you have a nice trade either way. So I don't think you need to be too impatient to pick a direction. Let it tell you where it's going to go. Again, holding here and breaking to the upside, you can look at 46. If it doesn't hold here, then you're looking at 31. So just giving an idea of what happens over the next couple of trading days could really be a nice trade on FCX. I like that one. Apple obviously held in there pretty darn well today, bucking the market trend significantly. Here we came down on Friday, back up, but Apple had no problem with what occurred in the market. But look where we are. So we're right there at that wave 5 target in the tap box. And so that's what makes this one a little more challenging as far as where does it go from here. Does it go through an extension from here? It might. You can see that there's, a zigzag pattern here. And so it's right there at the 100%, and then the 161.8%, pretty much encompassing the tap box. So you can get an idea there. You got two different Elliott wave Fibonacci targets giving you roughly the same price. So we're right in an area where it's difficult on Apple. It could move up to 170, but it's got resistance there at 170. So not too far overbought from the 10-day moving average, but if it gets to 170, it's going to have to regenerate some energy there. If it does, then you could be looking at a really nice tradable move. If the market calms down and things, the Fed backs off on the comments from today, et cetera, and move higher, then you could see the next fib level, 261.8, is 185. That would be a really nice move out of Apple. But we're at that target now. It closed near the high of the day, tiny bit overbought, but not too much because it was near the 10-day moving average on the low today. Just the close has gotten a little bit, but it's more concerning that we're right there at the target. This is where it was supposed to go. So do we go further from here? It's got to break 170. So we closed at 165. I think it's a hard trade between here and 170, but if it breaks 170, then we could have something significant there. Harvey's asking about a bear call spread, which is a bearish credit spread on JD, looking for a potential move lower. I think that the issue might be this area right in here of potential support, but if you put a bearish credit spread down there, then that could actually work, because if you place it out of the money, then you could have the stock move a little bit against you and still generate a gain. So if it came down here and bounced off or whatever, and you're holding your spread down here, you could be okay. So an out of the money bear call spread on it, that might work. It's a good suggestion. So we looked at USO, Myrna. Moderna, I believe, was one of the ones that was saying that it could take a while to find a booster for the this variant. But you can see that with the news, it took off, and that's just when you kind of shake your head, right? Bad health news is good for the drug companies. So it did move to the upside. Now note here, this 1030 cross. So we have a bullish 1030 cross. That matters a lot. It's a little bit overbought, and we have a doji today. So we might want to see that calm down. I think, if there's more news, if this is spreading globally, as it appears to be so much so far, I don't know that, and the symptoms appear to be more mild. We know that this virus affects everybody differently, right? That's one of the unique things about it is some people have no symptoms at all, and some people have passed away. So that's about as wide of a spectrum as you could get, which makes it clearly difficult to manage. But a little bit overbought right now, kind of just calmed down today after a couple big moves based on that news Friday, right? It gapped up and then followed through yesterday, and we got the 1030 cross. So you could be looking at this one running back towards that previous high at 480. I don't think that would be out of the realm of possibility. The CCI is only just above 100, so it's not extreme. Money flow is very solid. Yeah, this one looks pretty good. The only concern would be slight overbought condition right now. But if you were looking for something to move to the upside, then perhaps that's a potential mover there. He did get a pretty good cross between the two directional moving averages. The one that bothers me here is the positive coming down on a consolidation day is no big deal, but the fact that the negative ticked up, a little bit surprising to see that today. But if this comes back down towards the 10-day moving average without getting a reverse cross back in that 1030 and maybe just consolidates just another day or two, I might be getting too picky here and perhaps missed a big move in the next day or two. I think this is kind of going to be news driven on more commentary coming out about that Omicron variant. But yeah, that looks like the best bullish trade that we've identified out here. So that was a really good find. All right, so we're right on the hour. So we're actually going to finish on time. I think we got all of the questions and comments. So thanks everybody for joining us. I'm going to sign off the same way that I always do, and that is that time is the most valuable thing that we all have, and we very much appreciate it when you spend some of your valuable time with us, and in turn we try to make that time informative and educational, and so we hope that you found your use of the time to be that this evening. Again, thanks for joining us on the various social media platforms. Have a great week. Going to be a really interesting week. So it was from last week to this one. Tune in next week, see what happens between now and then. It's going to be